Hey everyone, welcome back to the channel. Today, we're diving into a question many investors ask. What is the best retirement portfolio ETF mix? Whether you're just starting to save or looking to optimize your current investments, I'll break down a simple, smart ETF strategy that balances growth, safety, and income. This video is for informational purposes only and does not constitute financial advice. Please consult a licensed financial advisor before making any investment decisions. Let's get into it. First off, why ETFs? ETFs, or exchange-traded funds, are an excellent choice for retirement portfolios because they offer instant diversification, low fees, and flexibility. Instead of buying individual stocks or bonds, you buy a basket of them all at once. This reduces risk and makes managing your portfolio much easier. When building a retirement portfolio, you want to balance three key goals. Growth, so your money can grow over time. Stability, to protect your money from big losses. Income, to generate cash flow when you retire. The right mix of ETFs can help you achieve all three. Here's a simple but effective ETF mix for most retirement portfolios. 40% total stock market ETF. This gives you broad exposure to the entire US stock market, large, mid, and small companies. Examples include Vanguard's VTI or Schwab's SCHB. This part drives your portfolio's growth over the long term. 20% international stock ETF. Adding international exposure diversifies your risk globally. You could use ETFs like VXUS or VEA to cover developed and emerging markets. 30% total bond market ETF. This adds stability and income to your portfolio. Bonds usually don't move in sync with stocks, so they help reduce volatility. Consider ETFs like BND or AGG, which hold a wide range of US investment-grade bonds. 10% REIT ETF, real estate investment trusts. REITs add diversification and income through real estate exposure. A good choice might be VNQ or SCHH, which invest in commercial and residential real estate properties. Your ideal ETF mix depends on your age and how comfortable you are with risk. For example, if you're younger and can tolerate more ups and downs, you might shift more into stocks, maybe 70 to 80% stocks and 20 to 30% bonds. If you're closer to retirement, you'll want more bonds and safer investments, maybe 40 to 50% stocks and 50 to 60% bonds. The REIT allocation can be adjusted too, depending on your income needs and market outlook. Remember, no one mix is perfect for everyone. It's important to review and rebalance your portfolio regularly and adjust as your life changes. If you found this helpful, hit that like button and subscribe for more smart investing tips. Got questions? Drop them in the comments. I love hearing from you. Thanks for watching, and here's to building a strong retirement portfolio.